For those of you who don't know me, I'm Kennedy. I am the CMO at Zendrop, and today we are going to be discussing all things cash flow for your dropshipping business. So we have the best of the best, the expert on the topic on today's call, Christian. So Chris can go ahead and take it away. He has a presentation for us, and he's going to let us know all we need to know about cash flows.
Okay, so first of all, nice to meet you guys. I'm excited. This is the first Zendrop live call that I'm attending, so definitely excited to be a part of this. Looks like people are still funneling in, so I want to keep this interactive. So as you guys have questions going through the presentation, feel free to shout them out and we'll get to them as I go through. The presentation is about 20 minutes, so I don't want to make it too boring. It's accounting and talking about numbers. So we'll keep it short and sweet and then open things up to answer questions for you guys. They can be about accounting. They can be related to taxes, cash flows, you name it. Just to give you a little bit of background about me, I'm an accountant that specializes in e-commerce businesses, specifically digital entrepreneurs that have online businesses. So obviously I've worked with Jared for a long time, and he tapped me to be the CFO for Zendrop. So here I am. So excited to do this presentation for you guys, and yeah, I guess we can get started. Okay, so guys, we are going to talk about cash flows, which is a big hot button in this space because being a solo entrepreneur or small team, it's very difficult to wear a bunch of different hats. And unfortunately, one of the most important things in business is understanding your accounting, understanding your numbers, et cetera. And a big part of that as an e-commerce seller is understanding your cash flows. And the reasoning is very simple. Margins in this space typically are pretty low. When you're in the business of selling goods online, you have your ad spend, you have the cost of the product, you have payment processing fees. There are so many things that you have to consider that top line revenue number might look really great, but once you account for all of these costs, it can be a relatively low number, percentage wise. And that's what we mean when we say margin. Now, what complicates this even more is you guys are going to see that from a cash flow standpoint, you can be making money on paper or losing money on paper, but your cash position can be good or bad. And that's oftentimes not really related to whether you're making money or not making money. So we'll go through in detail over the next couple slides what cash flows are, and more importantly, how to track them and what common issues you can run into as an e-commerce seller. So we put together this table here. So basically, this is the example that we're going to continue to go throughout the full presentation. And we have different slides that have notes for what you should look out for. So as we go through, feel free to take screenshots and save for your notes, because a lot of these things are going to directly affect you and your business, and they may be things that you're not tracking and probably should be. So, okay, cool. So to get started, for those of you who aren't all that well versed in accounting, this is what I would call an income statement. So it's basically just a summary of your profits, right? In business, obviously, we're all in this game to make money. And in order to track that, you need to track your profits. So your profits, we start here with your total revenues. This is very, very straightforward. It's where you're making money from selling, your goods online. If you're a Shopify seller, which all of you are most likely, this is the revenues that you collect from your customers. Then some of these expenses will look very familiar to you. Payment processing fees, your merchant fees, refunds, chargebacks, ad spend, cost of goods. Those are your total expenses to arrive at what I call gross profit. Now, when you hear gross profit, think of that as I think of it as your core business profits. Like, forget about the salaries, forget about the one-off expenses that you incur, the contractors, et cetera. Just your core business, which is your revenues, less your processing fees, less your advertising spend, less your cost of goods sold. Your core business by itself, is it making money? And then operating expenses, think of this as a catch-all. This is your salaries. This is what you're paying to contractors. these are the meals or the travel costs that you incur to operate your business. So then you get to a net profit number. So this is what we refer to as an income statement. Now, that to complicate things further, what I want you to start to think about here is there's two different ways that you can think about your profits. There is, and these are how accountants label these, but we'll simplify it for you guys. There's accrual basis, then there's cash basis. Now, this is very important to understand because in order to understand your cash flows, you have to understand that there's two different ways to look at your numbers. So accrual basis is on paper. Like forget about your bank accounts, credit cards, etc. On paper, is my business making money? Yesterday, how much did I make in on Shopify? What were my costs of goods sold on those orders? What was my ad spend yesterday? What were my merchant fees, et cetera, et cetera. So that is without looking at your bank accounts, credit cards. You pop open Shopify, look at your sales number. You pop open whatever your processor is, Stripe, PayPal, et cetera. What is the merchant fees I paid? All of these things to figure out your profit. That is what would be considered accrual basis. On paper, forget about whether you received the money or not. Were we profitable or were we not profitable? So then we have cash basis. So think of this as forget about on paper. If I just look at my bank accounts, credit cards, et cetera, like my financial accounts, did we make money or lose money yesterday? So this is total revenues. Forget about Shopify. How much did I receive in my bank account from either Shopify, Stripe, PayPal, et cetera? It's different. As many of you know by now as e-commerce sellers, if yesterday you had $200 in sales, that doesn't mean that you have $200 in your bank account. A lot of time you have to deal with reserves or holds or other things that can tie up your money. Same thing goes for all of these different categories, and we'll go through these each one individually. But the one thing I want you to understand is when we say accrual basis, we mean on paper, did we make money? Forget about my bank accounts, credit cards, et cetera. And cash basis is forget about, the systems for which I'm making money, my bank accounts, credit cards only. Am I making or losing money for profits? And understanding the difference between these two things will help you to understand your cash flows. And if you have issues with cash flows, why those problems are arising. All right, so this is the example that we're starting off with here. It may not make a lot of sense here, but the first thing I want to point out is if you look at the profits, these numbers are drastically different. So let's just look at the net profit. Accrual basis, we're making money, 1574.67. Cash basis, we're losing money. So this confuses a lot of entrepreneurs. And even you guys, if you were to put together these financials, you may not understand why on paper I'm making money and in my bank accounts, credit cards, it doesn't align. So let's go through each and every one of these line items and determine what some of the pitfalls are. What may cause revenue cash flow issues? So that is this category. So see here, we have accrual basis, we have cash basis, and you'll notice here that there are two different numbers. Why does that arise? So here we have cash reserves or merchant holds. For those of you who maybe experience high chargebacks during a certain period, or maybe you're working with a third-party processor, or whatever reason, delays in Shopify paying you out, there may be differences between what you're getting paid out and what your sales are. And one of the reasons for that is cash reserves or merchant holds. So one of the things you want to pay attention to at all times is if you were experienced or working with a payment processor that's withholding cash from you, you want to keep a very good pulse on when they're going to release that cash from you. Because if you think about it, if you're working on 20% margins on your products, but Shopify is holding 15% of your gross sales, obviously you're put in a position where even though you're profitable, you're not receiving a lot of those profits in cash because your processor, in this example, Shopify, is withholding cash from you. So having a pulse on what your cash reserves and merchant holds are is very important. And in our experience, it's always good to, check in with them every once in a while, because even if you have a period of very high chargebacks, you can follow up with your payment processors and see if they can either reduce your reserves going forward, or even if they have a lot of cash that they've held from you in the past, they can release that. So having a good pulse on your cash reserves or merchant holds is very important. And then the second item is delayed payments from processors. This isn't all that applicable, but for Shopify sellers, but for those of you that are multi-channel, if you're selling on Amazon as well as selling on Shopify, Amazon holds your cash for 2 weeks before they pay you out. So as you can imagine, that creates a huge cash flow nightmare, where if yesterday you had $10,000 in sales, that's super exciting, but you have to wait 2 weeks to receive that cash in your bank account. So obviously, thinking back to this example, it makes total sense that yesterday on an accrual basis, remember, on paper, how much money did I make yesterday? $16,000. But on a cash basis, if you were to look at your bank account, there was no deposit from Amazon in that example. So your revenues would be zero on a cash basis. So just very important for you to keep a pulse on your revenue cash position. Revenue is the most important part of your business. And accordingly, you want to make sure you keep a pulse on whether or not you're receiving your cash from your payment processors. Cool. Okay, so next up we have, we did revenue. Okay, so merchant fee cash flow issues. So here, if we flip back here, you can see here there's a difference between merchant fees. So what can cause merchant fee cash flow issues is improving the, what causes merchant fee cash flow issues? So high merchant fees. So when we think of cash flows, another potential issue could be if your profits are low, right? So that's something we want to consider. But if we go back to this slide, high merchant fees is important. A lot of sellers, if you're using a third party, don't know what their percentages are that they're paying. For example, if you're an online seller and you're selling through Shopify payments or PayPal or Stripe, those fees are usually fixed at 2.9%, right? Plus 30%, 30-cent transaction fee. But usually it's about 2.93% in processing fees you're paying. There's a lot of people that get sucked into working with third-party payment processors that promise them that they can get better processing rates than Stripe or Shopify payments or PayPal. And oftentimes that's not the truth. They have a lot of hidden fees. So what can happen is instead of paying 3% in processing fees, you can be put in a position where you're paying, 10%. I've seen upwards of 15 to 20% in payment processing fees. So keeping a pulse on how much you're paying in credit card payment processing is extremely important, obviously. Not accounting for merchant fees, self-explanatory. I see this all the time. I work with a lot of entrepreneurs that try to track their own profits. And one of the things you want to track is, hey, if I made $100 on Shopify, $100 is not going to go to my account. I have to pay, either Shopify payments, Stripe, PayPal, or whatever your credit card payment processor is, they take a fee. So you always want to consider what you're paying in fees. And you'd be surprised if you just reach out to them and ask them, a lot of them will reduce your fees. But at the very least, you always want to account for it and keep a pulse on how much you're getting charged. And then here's the last thing, chargebacks and other unforeseen fees. This is a big one. So in e-commerce, all of you guys are going to deal with chargebacks. It's just part of the game. You're going to have unhappy customers that don't want to deal with the friction of asking you for a refund. They're just going to turn to their credit card company and charge back an expense that they have. So the problem with chargebacks is a lot of people don't know this. When people file a chargeback claim against you, pretty much every credit card payment processor will charge you a fee as the merchant. So I know that Stripe, I believe, charges $30, but I've seen payment processors charge as much as $50 for each chargeback that comes in. So if you have 10 people file a chargeback claim in a month and your payment processor is charging you $50 per chargeback, you're looking at $500 in additional processing fees that maybe you didn't account for in your 3% calculation. So keeping a pulse on your chargeback fees specifically is very important. Generally speaking, in my opinion, it's safer to stay with the name brand, the Shopify payments, the Stripe, the PayPal, as well, if you can, because a lot of these third-party payment processor companies, even though they promise you all these great rates, there's a lot of chargeback and other unforeseen fees that they're not mentioning to you. So that is what may cause merchant fee cash flow issues. And if I look here, how can I fix merchant fee cash flow issues, improve the customer experience, reduce the shipping times? These are self-explanatory. The happier you keep your customer, the less likely you are to incur chargebacks, essentially. And the less likely you are to incur chargebacks, the less fees you'll pay for chargebacks. There's less of a chance that Stripe, Shopify payments, and PayPal will ban you from using their system. And then you have to turn to third-party processors. But improving the customer experience, reducing the shipping times. I know with Zendrop, we offer you guys the opportunity to select what shipping method you'd like to use and how quick you want to get orders to your customers. This should definitely be considered. The customer experience and how it's going to affect your bottom line should definitely be considered. So reducing the shipping times, investing in great customer support, especially when you're starting out, a lot of you may still be doing your own customer support, but maybe it's time to hire that army of VAs to get back to your customers more timely so they're happy, to prevent them from filing that chargeback claim. Because the more chargeback claims that get filed, the more expensive it is for you on the back end to pay for the fees. Control products and packaging quality. This one sounds kind of silly, but it's true. If you send someone the exact same product twice, right? One of them is in a really nice fancy package that is branded and has a great unboxing experience, versus the same exact product that comes in a not custom packaged, and there is no great unboxing experience. Those two products, even though they're exactly the same, the customer will very likely value that first product that had a great unboxing experience, great experience in terms of shipping times, etc., just because their experience is better. So they value it more. So they view that product, even though it's the same exact product, they view that product more valuable. So just something to consider here with the customer experience. And then also how can I fix merchant fee cash flow issues? Negotiate with your payment processors. Ask about the chargeback fees. Ask about reducing your processing fees. Sometimes, if you ask in a nice way or ask at the right time, you'd be surprised, what these companies can do to keep your business. So that is merchant fees. So we've got a question. Where do you recommend to find good customer support agents? So oftentimes what I see is a lot of people go to Upwork and hire people in the Philippines. So there's a lot of people out there that work for $4 or $5 an hour. I don't know exactly what the going rate is, but Upwork.com is a really good tool because you can go there, you can see what that that virtual assistant's rate is, and they'll oftentimes list in their profile, I have experience working with ecommerce sellers and customer support and whatever. So I think Upwork is a great place to find cheap labor that could do a very high quality job. So just make sure you're reviewing customer reviews for other people that may have used that VA. But that's a great starting point for finding good people that will help get you a better customer support experience. So cool. Awesome. All right, so what may cause ad spend cash flow issues? So going back to the chart here, we're down to ad spend. So ad spend, this is much more straightforward. So as many of you guys know that are scaling through Facebook, or maybe you're using Google or whatever, there are billing thresholds. So if you guys open up your Facebook ad account right now, you may see that yesterday you spent, I don't know, $1,200, right? So again, think back to this example. Accrual basis versus cash basis. Accrual basis on paper, what was your Facebook ad spend yesterday? Ad spend, 1,200 bucks, 1,200 bucks, let's say, right? Usually it's an exact number. Maybe it is 1,200, 200, or let's use this example actually, 2533.33. Facebook is usually very precise. Now, as many of you know, that's not how you're billed. If this is what you spent on Facebook yesterday, is that what's on your credit card today or yesterday? No. Why? Because Facebook has billing thresholds. So what I've seen for businesses that are scaled up, the most common way that people are billed is $900. Every $900 you spend, you get billed for it. So if you think to, again, on paper profit versus what's in my bank accounts and credit cards, you might see an example like this where, you know, yesterday you had 2,533.33 in ad spend, but what hit your credit card? 1,800. Now, why does that happen? Really straightforward. You only hit two $900 thresholds. So 1,800 was billed, but for that next $900, you didn't hit that billing threshold. So there's only 18, so 2,533 minus 1,800 is 700, what is this? Yeah, $733. So $733 didn't quite hit that $900 threshold. So maybe the rest of that will be billed tomorrow, then, you know, when you hit that $900 threshold. So there's not a lot of risk around that per se, because it's really close, more or less, between what hits your credit card and what's in Facebook, but just something to keep a pulse on. For the next item is fraud. If for those of you, especially when you're scaled up, you might be tempted to start working with an agency, which is great. Maybe I'm all for outsourcing your work. If you want to grow your business and scale your business, you shouldn't be, as the entrepreneur or the owner, the person pulling all the levers. So eventually maybe you'll hire a media buyer or an agency to run your ads or whatever. But the thing that I caution you with is you want to make sure that you keep control of how much you say you're spending and how much is actually hitting your credit card. Because in this space, unfortunately, I see it all the time, there's a ton of fraud. So if an agency has your credit card information, as an example, you know, maybe they have a bad apple that works for their company and they're using your credit card to pay for, you know, another person's or maybe their own ad accounts. So you always want to keep a pulse on what is in your Facebook ad account as being spent and what your credit card is spending. Because a lot of people, when they open up their credit card statements, will take for granted, you know, $10, $900 charges, and they don't really think to check and compare that to what Facebook says that they actually spent. So that's definitely a big thing. Timing is what I discussed with the $900 billing thresholds. So just something you want to keep a pulse on. This is full disclosure. This is a little bit less risky. And then missing ad accounts and order metrics and daily accounting. I see this. This is pretty common. You know, for those of you that use order metrics as an example, you may be showing, you know, this number in ad spend, but maybe $5,000 hit your credit card. And one of the first things I will say to clients that bring that up is, you know, well, wait a minute, did you connect all of your ad accounts to your order metrics account? So when you're doing your own accounting for, again, that on paper, did I make money yesterday? Make sure you're considering all of your ad accounts. Yeah, so that is ad spend. Cool. So we have here, how can I fix ad spend cash flow issues? Monitor and verify all daily Facebook charges, self-explanatory. Limit the number of people who have access to your BM and limit the amount of people who have access to your credit card. This one is obviously the riskiest part. You want to avoid fraud where it can be avoided. So you want to make sure that you're monitoring if someone else has your credit card or you're working with an agency or a media buyer, you make sure you keep a pulse on what ad accounts they're spending money on. So cool. So cost of goods sold. So if I go back here, you'll notice here that we have differences in cost of goods sold. And this is one of the biggest areas that I see people have issues with. Cash flows related to cost of goods. This is very confusing, so just bear with me. What may cause cost of goods sold cash flow issues? So we have here inventory purchases in advance, bulk, drop shipping supplier payments deferred, and sourcing agent fraud. So let's go through each in detail. So let's think about, again, we're going to keep going back to this conversation. Accrual basis is on paper, are we making money? Cash basis is what hit our bank account. Now, you guys might be looking at this and may get very confused in terms of, why is one number so much larger than the other? And it's actually very simple. Yesterday, if you sell 10 products on Shopify, and let's say each product costs you $2, your cost of goods sold is those 10 products times the $2 per product. So that is $20 of cost of goods sold. That would be your on paper accrual basis. That's what I paid for him. That is my expense for inventory. Now, if you guys haven't caught this yet, very clearly, if you look at your bank accounts and credit cards, that $20 may or may not have actually been spent yesterday. And there's a couple of reasons why. Number one is if you prepay for inventory, right? If you're prepaying for inventory, let's say you take advantage of our Chinese New Year deal and you have inventory that you purchase in advance, you may shell out more money to purchase that inventory in the future. So that is one way that could be confusing in tracking your profits, because on an accrual basis, that $15,000 was not spent. It's not cost of goods sold. It's only $1,900. It's only for the orders that you had that day. So that's one example of how this can be off. The other way is if you defer payments to a supplier. And this is not something Zendrop does, but for those of you who have experience with other suppliers, that is something that's common. So if you, let's say, for example, pay your supplier after, let's just say once per week, right? All the orders from the week prior, you pay your supplier. What happens is really all week long, your cash basis cost of goods sold is zero until you actually pay it. And if you look at it on paper, accrual basis, you have a cost of goods sold each day. So not to say one is right, one is wrong, but you have to keep a pulse on both of them to understand your cash flows. Cool. So that is cost of goods sold. And I think, okay. So this is the last part that we're going to cover here. So can I have good cash flows with bad profits? And then we're going to look at the other example too. Good cash flows with bad profits. Now we're going to talk about the risks. I always recommend when I deal with new entrepreneurs that they do this. And we'll talk about the tools that you can use later to accomplish this. But if you don't appropriately manage cash flows, you can end up in situations like, hey, I have a very profitable business, but for some reason I can't pay my credit card bills. Like, what's happening? Or vice versa. Like, hey, my cash looks so great, but on paper I lose money every day. Like, is something going to happen where I'm going to lose all my money? Like, getting a pulse on your cash flows is extremely, extremely important. So can I have good cash flows with bad profits? And the answer is yes. So here's an example here. This is to show like how complex this can get. But let's look at this example. Accrual basis on paper. Did we make money yesterday? On paper, when we look at our revenue, Shopify says we made $7,600. Great. Ad spend. I open up Facebook, $2,500 was made. Cost of goods sold. I open up Zendrop and $1,900 was paid, so on and so forth. On paper, we made $1,574. But bad cash flows. Let's take a look at why it's so different. If you look here, total revenues is pretty close. These revenues are less. Maybe your payment processor is withholding some cash from you, so you didn't receive all of your cash. Merchant fees, this is a small difference. This is immaterial. Refunds, this is immaterial. Look at ad spend. Why is this different? Because on Facebook, they tell you the exact amount. So on paper, you paid more, but you only paid $1,800. So this is, again, the difference there. Look at cost of goods sold. big difference here. This is really what's driving our bad cash flow position. Now look at this. Yesterday, we had $1,900 in cost of goods sold, but maybe we paid maybe we paid a supplier in advance. We paid $15K for this Chinese New Year promotion that Zendrop is running. So even though you have a really bad day in terms of cash flows, check this out. You were profitable yesterday. So what I would say is don't freak out about this situation, because as you continue to get more sales, your cost of goods sold number each day, in theory, would essentially be zero, right? Because you already paid for that inventory in advance. And you wouldn't know that unless you had a handle on your cash flows. So this is an example of bad cash flows with good profits. Let's take a look at the other way around. Believe it or not, you could have bad profits with good cash flows, and something you want to look out for. So let's walk through this example here. So total revenues, same situation. From a sales standpoint, you have 7,600 according to Shopify, but what hits your bank account? Less than 6,000. That's something that you should be looking into. Why didn't we receive all of our money? Maybe the payment processor is holding cash from us, so on and so forth. Immaterial differences here. Ad spend, check this out. Again, same thing. On Facebook, they said you spent more money than you actually did on your bank account. So later on, you're going to you owe Facebook another $500. It just hasn't been billed yet. So from a cash flow standpoint, it feels like you didn't spend that extra $500. Why? Because it didn't hit your bank account or credit card yet, even though you owe Facebook that $500 difference. Cost of goods sold, check this out. So on an accrual basis, on paper, did we make money? You have $2,500 in cost of goods sold that day. But check this out. Maybe you're paying your supplier deferred, or maybe you have inventory. So if you look at your bank account, you might think to yourself, wow, I spent zero. You don't feel that impact because you don't see that cost of goods sold hitting the bank account. And then operating expenses, to keep things simple, we kept that the same. So this is an example of a business that's losing money, but if you look at your bank account, you might be feeling really good about your position because you made $741 if you look at your bank account. But if you look at your actual on paper, do we make or lose money? You're actually a business that's losing money. So this just goes to show, $700 going in the other direction, not a lot of money. But if you multiply this over the course of a month, where you have 706 times 30 days, you have 21K in losses, where you may not even realize that you're losing money. There's a leak. So that is really the importance. Both of these scenarios are really the importance of tracking cash flows. So cool. So that's all that I've got here. I don't know if you guys have any questions, any follow-up questions at all, but happy to go through those. And, it could be related to cash flows, could be related to taxes or accounting. I have a lot of experience in this space, so I've kind of seen it all in the 3 years or so that I've been in the space. So, okay, so Jake reached out. Do you recommend QuickBooks? Absolutely. For all of our clients, we use QuickBooks. Xero is doing a huge marketing campaign to get a lot of e-commerce sellers on. Also, bench.co is also running a big campaign. Personally, I don't like Xero. It's not as, as you grow your business, you're going to want to hire a bookkeeper. And most bookkeepers don't have experience with Xero. So you want to make sure that you have a system from the start that is, that you can easily transition to a bookkeeper. And QuickBooks is a better option. And not to dog other companies, but bench.co is really, really bad. Don't let them sell you on their services. I've seen it time and time again. Not so much on the bookkeeping. You might get some semi-accurate numbers, but when it comes to doing taxes, you'll have all kinds of problems with whatever CPA you use. So my recommendation is use QuickBooks. If you're going to do it yourself, there's plenty of content out there to, teach yourself QuickBooks. You can look on YouTube or wherever. And then it's easy to transition onto a bookkeeper as your business continues to grow. You can just transition that existing QuickBooks account to someone else that'll do your work.
Are there any other tools that you recommend to use to track cash flows?
Yeah. So two ways. So again, let's think about accrual versus cash. Accrual on paper, are we making money versus cash? What do our bank accounts and credit cards say? So for accrual basis, the number one system in the space, not for long, but for now, is a system called Order Metrics, where basically you link up your Shopify account, you calculate what your product cost is per unit, and they link up to your Facebook ad account, etc. And on a daily basis, they'll spit out a profit number. So I see a lot of drop shippers in this space. I would say, for the successful ones, 75 to 80% of them are using Order Metrics because they understand the importance of understanding on paper, am I making money? And the reason why I say currently Order Metrics is because I'm working with Jared internally. We are working on an accounting system that's going to be a direct competitor to Order Metrics. And maybe I'm biased, but I think it's going to be much better. So look out for that. It's going to be called ZenVision and it's coming soon. So that is, again, on paper, accrual basis. How do I track my on paper profits? Order Metrics is a good system for now. And then for cash basis purposes, QuickBooks is what you would use, because QuickBooks, what it does is it connects to your bank accounts, credit cards, and it tracks every single transaction that comes through. So the two systems you want to use are Order Metrics for accrual basis and QuickBooks for cash.
Chris, thanks so much for coming on and talking about this. I learned a thing or two specifically. I think this is super, super fascinating. And we're all very excited for the launch of ZenVision. I don't know if we've talked about it publicly, have we?
Jared mentioned it in an interview with Scott, but no, haven't really talked about it too much, but it should be coming within the next 2 to 3 months. We were aiming for Black Friday, but it's a complex system. We're working hard to get it right for you guys. So just be on the lookout for that. We'll be sure to tap all of you when it becomes available.
We will let you guys know. Well, if that is all the questions we have today, you guys, thanks so much for coming on with us today. And again, Chris, thanks so much for sharing all of this valuable information.
Awesome.
All right, you guys, everyone have a great rest of their Thursday, and we'll see you next week on Zendrop Live. Bye, everyone.